The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, and I hope everyone out there is having a fun and indeed an exciting and, of course, profitable trading week. My name is Mark Longo from the OptionsInsider.com, as well as the Options Insider Radio Network, and we are beset over here by all sorts of gremlins in the works, but gremlins or not, we will do a show come hell or high water, and so the team is assembled and we are ready to dive into the program. And speaking of the team, we're going to kick things off here with our good old friend Mr. T-Nav, aka Tim Navabi from Options Express. T-Nav, welcome back to the show, sir.
Hey Mark, how are you? Glad to be here today. Haven't been on in a while.
Yeah, good to have you back. We had Rob on last show and that was like a blast from the past. He hasn't been on in ages.
Yeah.
He said, "You're hogging the mic these days." That's what he said.
John and I looked at each other and we said, does he remember how to do the podcast?
Also joining us from Maine, the land of lobsters and, of course, technical gremlins, he is Andrew Giovinazzi from OptionPit.com. Andrew, welcome back to the show, sir.
Me and my gremlins are happy to be here.
We put all of the blame squarely on Andrew's shoulders, listeners.
Sounds like it right now.
Any technical issues or any delays to the program, just send your emails to Andrew over at OptionPit, and he will take the brunt. And last but not least, of course, we are also joined by good old man from the mountains himself, Uncle Mike Tusaw, who has been called away briefly, but will return to us momentarily. And with the team assembled, we're going to dive right into the trading block.
The trading block.
And welcome to the Trading Block. This is, of course, the portion of the show where we discuss what was trading, what was moving the markets, and catching our eye out there in the street today. And it was a relatively mild day overall on the street. S&P closed down about 2 handles to 1244. NASDAQ up about 6 to 2626. The good old Dow down 25 handles to 1220. And the VIX cash hovering in the high 20, I almost said high teens. Those are the old days. Hovering in the high 20s now, at 27.41, down nearly 0.4 of a point. So not too much lighting up the old street today, and a relatively quiet day after the frenzy of action we saw in the past couple of sessions. And it was like I said, an interesting day. Of course, we didn't have a show on the massive 400 points rally day. So maybe we'll start there before we dive into today's activity. What did you guys make of that explosion to the upside? Did you find it just irrational exuberance? What was your take on that? Seemed like almost the release valve in the market was being let off, and everyone was just diving in with fervor there.
Mark, I was going to say it's just no fun unless it gaps up 300 points.
Yeah.
Or gaps down 300 points.
Doesn't make our radar anymore unless it gets that high.
Right. It's hard for any of those volatility indicators to get lower too.
Yeah, vol can't go below 30 if you know the new frame of reference for the VIX and volatility right now. You just can't do it. It's not allowed. They won't let it.
Not at 4% per day. That's all we ask. No.
Yeah, that's something.
Speaking of which, we have some interesting numbers on an article that was linked on our site today. The Options Insider here came from Bloomberg. They were pulling some interesting data, and they were saying that the S&P has climbed 3% or more in a day 36 times in the 3 years since Lehman imploded, so about once a month. And that compares with about 27 times for the 9 years prior to that, or 3.3 times per month. And so that might sound like a lot. Wow, vol has increased so much. Yeah, on the flip side, as Andrew was just jokingly alluding to, if we're really to maintain these levels of VIX, we need to do that every day. We don't need to do that once a month. So that kind of puts the lie somewhat to these effusive levels of volatility in the market, that there really is more to it than just the what the market is doing. Because in the pure vol of vol terms, we shouldn't be maintaining even this level of the VIX. We should be far lower. Would you agree or disagree, Andrew?
I would agree. I just think this level is more worry, and because every time we turn around, the Europeans have fixed the crisis. And again, which we probably saw rational short covering yesterday on a grand scale, the Europeans and now the U.S., I don't know where we're going to get the money to fix the crisis, but I think that's why they just can't really let the air out of any of these volatility indexes, just because nobody's really solving anything. They're not fixing. They're just band-aiding still.
Exactly. If you looked across the board at all the coverage yesterday of the explosion to the upside, you saw everyone saying, yeah, we're covering some shorts and maybe we're taking some positions off the table here, but no one was really saying with enthusiasm and gusto that they were jumping in with 2 feet and getting long any sort of size anywhere in any particular area of the market. So it still seems like there is a lot of testing the waters, and you're right, covering the shorts, taking some of their profits off the table, and then letting the chips fall where they may, and thus we have this almost artificially inflated, I suppose you could say, level of VIX here, where if all the numbers we just traded on the numbers, we'd be back in probably mid-teens somewhere at this point. But yeah, a lot of interesting stuff coming out today. Of course, also it is the first of the month, and that means it is, for those of us here in the options biz, it's options numbers day again. We do a lot of this kind of stuff here on the Options Insider, and indeed the full article is available on the optionsinsider.com. Just surf on over and you can click through all the stats from the OIC detailing the goods, as it were, for last month. And it was overall last month in November, not exactly lighting up the tape in the land of options, down about 2.18% from the previous year. So year-over-year volume in November was down. Nonetheless, even though November was down, overall total year-to-date volume is just off the charts this year. Year-to-date volume is nearly 20% higher than it was at the same point last year. So all these days we've alluded to of the 300-plus point days in the Dow and the 30-plus handle days in the S&P have really kicked in there to generate an commensurate explosion, I should say, of options volume across the board. And if you're looking at ADV, the total average daily volume for the year so far, it's about nearly 18.5 million contracts a day, which is up nearly 19% from last year. So overall, just a banner year so far for options. Of course, we've talked a lot on this show and on the Options Insider about just what those numbers actually mean and how much fluff goes into those numbers. There are a lot of those contracts going up that are truly meaningless in every sense of the word. They have no economic intent behind them. They're little to no risk behind them, and they're kind of just they're crossing or they're div trades or a lot of high freak fee arb, which is generating more and more of the volume these days. But even if you parse that stuff out, this trend, it still is north, and it's interesting. Certainly a good trend for guys like you, Tim, on the execution side of the business, that things are going to look strong for you in the near term.
Yeah, let's hope so. I mean, I think, like you said earlier, it's to me, this just looks like one computer trading with another.
Spoken like the old man of the group.
I mean,
those darn computers.
I mean, really, it's just and then you have Congress insider trading. So that just kind of seems like what's happening here.
They're 27%.
How despicable is that? That's just horrible.
27% of every ADV we see these days is congressmen just pocketing cash for their own purposes. But yeah, you're right. I've said this a number of times. I don't want to beat the dead horse, but yeah, this is kind of the fire hose, as I refer to it, of volume coming out of the OIC. This is everything. It really isn't parsed. It isn't sorted. It isn't filtered in any way, shape, or form. And once you really have to start doing that to really start seeing the true numbers about what's going on, the true economic intent behind it. And I'd be curious to see if someone actually went through and did filter those contracts. Obviously, there's a very subjective terminology you can use there to apply to which contracts are quote-unquote relevant and which ones aren't. But if you start filtering out some of that, like I said, the div trades and maybe some of the high freak fee arb that is indeed what you're saying, computers trading with computers, and a bunch of other things that really have no real economic intent behind them. I'd be curious to see what the actual trend is of actual legitimate customer paper and what they're doing, if that actually is up, or if it's just being sugar-coated in this sea of fee arb and div trades and everything else.
I don't see how that's up. I just don't. I don't think there's enough real customer paper in the market. I know enough guys that are looking at stuff to do, and it's why don't actually the easy way to do it is just see stuff that's commissionable at like kind of a full pop somehow. See how many people are actually paying that instead of all these all that other stuff. There's got to be some way to do that, I guess, but only the exchanges know. We'll never know it.
Yeah, and OIC always gets mad at me whenever I bring up this topic because they maintain the mantra that a contract is a contract and it's all of equal value. I'm amazed to this day that there hasn't been more effort and resources being put into this by some of the third-party vendors and others to really start filtering this feed, because it's so much now that it's even starting to clog the trading firms and other firms that are looking for shows, looking for tells, and looking for data. And if you have to filter through all this nonsense and noise to get at the true meaningful data, it impacts them negatively. So there are some firms, I think NYSE Technologies is starting to offer some sort of filtered feeds, and maybe others are starting to come up with it as well. But there's definitely room for that here in the option space, as we're seeing so much more noise being entered in. The signal to noise ratio is really starting to drop in terms of all the fluff we have coming in. But nonetheless, an interesting trend to note and some numbers to watch. And if you want to read the full data, then by all means surf on over to theoptionsinsider.com and click on the story there. Of course, this will mark the 9th consecutive year, according to OIC, of annual record volume in the options business. So nearly a full decade of record setting, for whatever that's worth, I suppose. Anything else catching you guys' eyes today in the relatively unched day in the market?
No, it's kind of boring.
What was the BBI today, Uncle Mike?
Whatever I wanted it to be. There really wasn't a whole lot going on.
Yeah, you weren't really scrambling to roll metals puts or write upside calls in Apple or anything like that.
No, not at all. I was really very calm.
Speaking of which, Apple north of that 375 level. So are you a bull again, or have you reinforced your love of Apple, or are you still kind of on the fence?
Still on the fence. I mean, it's just like I think when I'm gonna reevaluate Apple probably in the maybe mid-quarter next year as to whether it starts to make sense to get out of it, just because of the fact that Christmas is coming, and I think that'll really tell the sign of it. And if let's say Apple has a horrible Christmas and no one wants to buy an iPod or an iPad or anything like that, or iPhones or let's say it's so bad that the I's become E's or W's or something like that, whatever the case may be, then I think it's time to reevaluate at that point. But for now, we're hedged pretty closely on this one, so we're just going to wait this one out for now.
I'll tell you what will be the straw that breaks the camel over there at Apple. It'll be the Kindle Fire 2, because the Kindle Fire 1 is selling pretty well because it's got the strength of Amazon behind it, but it's getting a lot of middling reviews that it's kind of weak hardware that was obviously rushed out for the holidays. And now once they get their act together and make a credible competitor in round 2, that'll be interesting to see how that stacks up against whatever iPad or whatever Apple, I almost called them iPad, whatever iPad puts out next year in Q1 for the iPad 3, and we'll see how those two shake up up against each other, and then we'll start to see maybe if Apple is still the indomitable titan, or if it's the chinks are starting to show in the old armor. But
time will tell.
Yes, exactly. And that is going to do it for the old trading block. And now we're going to dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, and welcome to my favorite part of the show, except for, of course, the Tim Navabi block, which is, of course, the odd block. This is where we dive into and parse and analyze some of the interesting and or unusual and sometimes even questionable activity that's lighting up the old tape today. And with some interesting pickings today, it wasn't an explosion of activity, but there were a few notable exceptions to that. And staying in the tech bubble for the first one is RIMM. Research in Motion, of course, ticker symbol RIMM, closed today at $18.58, up exactly 4% or 72 cents on the day. And this is the name that's lately been doing over 100,000 contracts a day. They did 130,000 today, most of that driven by some renewed takeover chatter here that someone's going to come in and scoop up the beleaguered BlackBerry maker. Of course, the BlackBerry not exactly lighting up the tape anymore, and the RIMM tablets, the playbook, they were giving it away over Black Friday because no one's buying that one either. So it's kind of a dire times for BlackBerry and for RIMM right now. And so yet, despite all this, the stock is low enough now where we're seeing renewed interest in the takeover possibilities, and we saw people coming in with some really, really near-term bets that this is going to happen really soon, which is kind of what caught our attention here. This is not someone loading up on Jan or March calls. This is people coming in, picking up the weeklies, which some of these have 1 day left to trade. So we saw people coming in, gobbling up the DEIS 18 and 19 weekly calls, which, like we said, expire tomorrow for 45 cents for 1,100 the DEIS 18s, and then 16 cents for 3,500 of the DEIS 19s. Again, these are pure flyers, pure lottery tickets, because these things expire in less than 24 hours now. So a lot of really, really near-term specs. Also saw people coming into a little bit longer term, but not much, the second week weeklies that expire next week. People rolling into the DEIS 19s, 20s, 21s, and 22s. For about nearly 1,000 of the DEIS 19s went up for about 53 cents, nearly 700 the DEIS 20s, and 850 of the DEIS 19s, and 700 the DEIS 20s for about 40 cents and 53 cents on the 19. So yeah, these numbers are all over the place here, but there's quite a few people coming in near term here in the December weeklies in RIMM. So have you guys been watching this guy at all? These weeklies, and the stock's got to gap up either 7 or 12% for either of these trades to start breaking even here on this name. Quite a bit of very near-term action here in RIMM right now. And if you guys, Tusaw, you probably don't play in RIMM that much. I know you're very, very big on the Apple side, but Mr. T-Knob, anyone there at OX lighting up the tape today in RIMM?
No, not at all. That was one that, used to be popular maybe a year ago, 2 years ago, but yeah, nothing today on RIMM that I saw.
Yeah, I would not be on this side of the tape with these trades. That really such near-term paper in a name that has been so beleaguered with problems over the past couple of years. Either you really have to have a strong feeling about this one. I would just get the heck out of Dodge. I wouldn't touch these weeklies with a 10-foot pole here, especially these the 20s and 21s. These guys are really bullish. Either that or they're really foolish. Probably a little bit of both.
The weeklies are tough.
Yeah.
We're going to have to say the weeklies are tough. I'm actually kind of more interested in the January because volatility is around 80, and you can kind of sell Jan straddles and buy upside calls, and you basically capture a range in the stock from like 14.5 northward, although you don't make the big bang on a takeover. I don't think that looks particularly bad, and you're probably getting close to somewhere just the cash in the company if all goes to heck. So, I mean, there's got to be a point in RIMM where these even if they break it up, it's worth, X dollars. And I think we're kind of sort of fishing around that point, not even to mention the, auctioning off their intellectual property.
We've joked a lot on the show in the past, and I'd be curious to see how much of this paper, what percentage of it is Canadian in origin, because we always joke that there's that strong nationalistic bent for RIMM, and they have these zealots up there in Canada who will buy and hold RIMM regardless, and they're probably some of the ones you'd mentioned January, Andrew. I'm looking at the upside skew here in January. It's bit up. There's some love here. Yeah.
All of a sudden, I'm looking at a Jan. I've been looking at this, so I'm looking at the Jan, and actually this has kicked a little bit since, we had some people put it on, so it's good. 80, it's 1-2 vol points up. That's a pretty big reversal from how it normally is. So something's going on. At least, maybe it just doesn't. It's hard for the name to just stay down here around $18.50 or something like that. But,
yeah, you can leg in some decent verticals provided you have a decent handle on where you think the stock will go after an acquisition. If this gaps up 20 handles, which I doubt, but you never know. Maybe you don't want to be net short too many units to the upside on, let's say, a size 1x2 or something like that.
No, I wouldn't do 1x2 in this. I would be more like selling straddles and buying upside calls and just try to collect the net credit. So if the name took off, you'd still make money no matter what on the upside. And then if it does nothing, you just watch the premium rot away and then make money that way. So it feels like the better bet is kind of letting the downside go below $14, $13 because it hasn't, as much as it's tried, it just can't get down there yet. So I don't think I don't like the fact of leaving the upside open, personally.
So let me get this straight. You're saying that putting on a more nuanced spread strategy with a few months to go is preferable to picking up upside lottery tickets with less than 24 hours? That's a better strategy?
I'm going to go out on a limb, Mark, and say that, yes.
We'll see who's right tomorrow.
Yes. We'll see. And either way, tomorrow, if it gets taken over $25, I know a couple guys that'll be happy either way. So, and all those little lottery ticket guys, they'll be dancing in the streets, and they'll do it again next week on, who knows.
We have to give those one-day lottery ticket guys a 0.5 or maybe even a 0 on the savvy scale. That's just terrible. I really can't endorse that sort of pure scratch and sniff type lottery ticket trading at that point.
Oh, come on. They could be insider traders and they could be crooks. Give them a little bit of credit.
Yeah, that's true.
Could
be your local congressman.
Yeah, that's right. That's congressman trading.
Well, you know what? That would be funny. I wonder if you could actually go back to the exchanges and say, could you actually trace this 10,000 lot for me the day before the takeover was announced? And it's Barney Frank, and it's he's actually trying to finance his retirement on his last.
Yeah, he's
day.
Done, so he knows he can't insider trade anymore. So one last big bang he's going out with.
10,000 lots everywhere.
Because everyone knows Barney Frank is size up in RIMM.
Oh.
All right. And then moving on here in the old odd block to another, not exactly a tech name, but they do have a horse in that race these days. This is Barnes & Noble. They closed at $14.59, down $2.85 or 16% on the day. And that isn't the worst of the pounding they got today. They were actually down nearly 24% at one point today, down to like 13.27 or so. So substantial beating being delivered here in Barnes & Noble. They came out this morning before the bell and posted a second quarter loss of 17 cents a share. The analysts know how much we love the analysts. They had been expecting them to actually make 3 cents a share. So 20 cents in the wrong direction just sent the stock into a tailspin. And of course, these types of moves like this, when the stock is so beaten up, you kind of get two different types of paper flow that might be interesting. And either you see people really piling in, just loading up on puts because they want to get in on that downside price movement, or towards the tail end of it, you start seeing people turning to the other side and saying, this thing is way overdone. I'm going to start scooping up some upside or some bullish spreads in general here. And that's kind of what we saw towards the latter half of the day here in Barnes & Noble as the move, or actually towards the middle of the day when the move was at its worst, we started seeing people starting to pile in and picking up bullish spreads. Barnes & Noble, BKS, does about 3,000 contracts a day. They did 42,000 today, so they were lighting up the tape today. The bulk of it, let's see, we saw nearly 5,000 of the January 15 calls being scooped up for $1.70. And where did these guys go out there? They went out. Well, just look at that. Look at these. Either he's picked them up at, I don't know where the stock was when he picked these up, but either the vol has come in substantially or he picked them up at a much higher level because these went out $1.30 at $1.50. We also saw the Jan 16s and Jan 20s pretty active. 3,700 of the Jan 16s and about 3,000 of the Jan 20s being gobbled up as well. It wasn't all light side activity. There were some people floating to the dark side here in Barnes & Noble today. We saw about 2,200 of the Jan 12 half puts going up, being picked up for about $1 each. These have since come off substantially as well. So we see a lot of people on the long premium side on both ends of the equation losing out today here in Barnes & Noble. But yeah, so the bulk of the activity looked like it was to the upside, with some people actually piling into the downside as well. So not a complete one-sided picture for Barnes & Noble, but nonetheless interesting, especially considering they just released that Nook tablet to relatively favorable reviews. Apparently, maybe the development of that tablet cost them more than people expected. I'm not sure what contributed to that loss, but nonetheless, a lot of paper rolling in here. Tusaw, you watch anything at all with Barnes & Noble?
I watch pretty much the declining age of books going away. That's pretty much it.
Yeah, I hear you. All right, you know what? That is going to do it for the old odd block today, and now we're going to roll right into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Xpress Block. This is, of course, the portion of the show where Mr. T-Nav peels back the curtain over at OX, and we get to peer deep inside the quote-unquote bowels there of the old platform and see what's going on in OX land. So with that beautiful picture established, Mr. T-Nav, take it away, sir.
Okay. Thank you very much, Mark. I appreciate it. I just wanted to share with you, I don't know if you heard this news, it's from the Direxion Shares, that their 2 times bull and bear ETFs are now going to be converted to the 3 times. So, as I said before, that much more juice.
Why lever 2X when you can lever 3X? Well, you know, if you're going to come, go big or go home.
I agree. I mean, you know, with all this volatility, let's just make it a bigger party.
Yeah,
right?
You're wasting my time with this 2X stuff here. You know, it's 3X or nothing for me.
I see a lot of people do trade these, though.
They're okay. They're interesting contracts.
Interesting is a good word, yes. You know, I mean, I think for the short term, I think they can, you know, they do serve a purpose. But it's, you know, people do try to trade them for the longer term, and it just doesn't work.
Now, are you seeing a lot of activity on the OX platform, even though you guys and pretty much every other broker under the sun really raised your rates on these things last year to try to curtail some of the crazier speculation we were starting to see in these levered ETFs and the options on the levered ETFs? Yeah,
I mean, the activity definitely has gone down, but there are people that are, you know, still taking a shot with them. I see a lot of times people will trade them, you know, early in the morning, sometimes, you know, on the pre-market, and they'll look for a move, you know, right on the open, and then they'll get out. And that's pretty much where I've seen them most successful. Options on these, not too many, but they're there. I see people use them. Again, you know, pretty much for the short term.
Yeah, I'm looking at the large cap one here, the BGU, and that did a whopping 648 contracts today in terms of options. So yeah, options is not where the action is, and they do not a ton of float in the underlying either. About 2 million they did today with an ADV of roughly 3 million, so a light day today for them. So they're not putting up 200,000 shares a day, but they're doing a little more than that. But yeah, not exactly a high liquidity name. What else is lighting up your tape over at OX, sir?
Other than that, things here at Options Express are going well.
Our listeners will be very glad to hear that, sir, that things are going well at Options Express.
Oh, well, thank you. I was just going to say that, a lot of people seem to be just sort of, kind of today just trying to figure out what happened yesterday. They had no idea that, all of a sudden, liquidity would be made easier, and just kind of shaking their heads saying, how can they do that? What's going on? What does it really mean? So still a lot of people, I think, are kind of
yeah, it was an interesting
today.
1-2 punch, because earlier in 2 days ago we saw the news that all the financial downgrades are going to start coming out, and their warnings coming out of the different that everyone thought that was going to really drag the overnights down, and into the next day the session was going to open substantially lower. Then we saw, of course, the lessening from the various central banks up there, and that seemed to just set off the fire hose in the other direction, and instead of opening strongly to the downside, we shot up and never looked back. It was definitely an interesting one, to say the least. Were you guys inundated yesterday?
Yes, we were very busy, very, very busy all day long. And something else I'm starting to see now is some people starting to dump their holdings from the year, trying to do some end of year selling, taking some of those tax losses. I've seen some of those trades come by.
It is that time of year to start taking those nice losers you have off the table and letting Uncle Sam pay for some of your mistakes in the market.
Yeah.
All right, thank you for that, Mr. Tnov,
Sure.
And that is going to do it for the old Express Block today. And because we are running a wee bit late, and because we have doing an abbreviated show today due to all those technical gremlins lurking from Maine, we're going to dive right into Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is, of course, the portion of the show where we look at, we peer into the tea leaves, as it were, to see what the market holds in store for us. And I think most of the tea leaves that we're all looking at kind of stop at tomorrow morning, because, of course, we have the old non-farms. Mr. Tnov, are you coming in early tomorrow for those?
I will be in early, yes, for the non-farm.
So if you have some early questions, call Mr. Tnov, or call him on his cell phone even before he even gets in, because he appreciates that level of customer interaction.
Mm-hmm.
And you're pretty much 24/7, right, Tim? I mean, you'll answer your cell phone, 2 a.m.
Yeah.
Whatever
definitely.
Customer needs, they have to be addressed. You're there.
Absolutely.
No, well, the non-farms aside, everyone's kind of watching those. Of course, they are maybe a little bit relegated to the back burner a bit, perhaps in more so than in the other weeks, as we have so many other large macroeconomic events lurking in the shadows there. Like Tim said, we are still trying to parse the tea leaves on exactly what happened yesterday and see exactly why we were up so much and why today was kind of just a day of rest, almost, after such an irrational exuberance yesterday. Andrew, I know you guys were pretty short Groupon in the recent days. You said you're looking at the upside in RIMM. What else is kind of on your horizon going into tomorrow and the weekend?
Mostly just some happy people that volatility has come in a little bit. Weekend-wise, I want to see them actually go out and start to hit the bid a little bit on some of this stuff. Some of the individual names are getting lower, like, Apple is starting to get close to at least in December contracts at the money, starting to get pretty much the low point it's been for the last 3 months. And I don't really know if that's bullish or not, but they're certainly marking it down. So I would love to jump onto the premium buying side of the bandwagon anytime soon. It's just still hard to do. So I'm kind of looking and waiting on all that stuff.
And nice to see that VIX finally take that turn south of 30. I know you guys over at Option Pit and quite a few others out there have been lurking on that VIX downside for a very long time. I think most people, since the initial debt debate back a few months ago, when everyone and their mother was really loading up on VIX downside. And some of the more, I suppose you can call it, some of the more maybe bullheaded, or perhaps some of the more just longer term horizon people have been sticking with it the entire time. Others have rolled and done some other things since then. But yeah, it's been interesting to see how much paper still has been lurking and waiting in the wings for this VIX to finally take a bit of a dip. As I said before, I think VIX can stand to go lower. Whether it's going to happen anytime soon, probably not, given all the things we have going on out in the marketplace and just the overall sentiment out there that keeps the VIX aloft here at these high 20 levels. I don't think this is going to recede into the low 20s or even the teens anytime soon.
Yeah, the position we still prefer is kind of the short time spread and all this for a lot of this stuff, the indexes, and it's been working fine if people can put them on. Mostly just because it's kind of riding that wave, but I mean that's it. It's a hard market to trade one way or the other, I think. Yeah,
long gamma seems to be the path to victory right now. At least if you can scalp it, and that's kind of the disclaimer we put on a lot of these types of things when we talk about we want to get long here or short here. Is if you want to really effectively trade long premium or long gamma as an options trader, you really need to have that scalping component to it. And if you're just one of these guys who's coming in, just putting on the time spread without the other components, then you're probably not going to fare as well as some of your peers out there, let's say.
It's tougher.
Yes, it's tougher.
You have to pick a really good, you have to pick a very good line to put the trade on.
Exactly.
So far it's been okay.
All right. Well, I want to thank all of my cohorts, my partners in crime here for joining me on this abbreviated edition of the Option Block. I'm starting off with you, Uncle Mike Tusaw. What is going on in the land of Know Your Options? A little birdie has told me, I think that you're planning perhaps a webinar this weekend.
Actually, we're taking some time off for the next couple of weeks. We are actually in the process right now of regrouping and revamping a lot of our webinars. What we're going to be doing right now is becoming a little bit more in depth with our webinars. We're going to get more detailed. We are going to make things not just so much like the one-on-one webinars have been a huge success for us. But what we want to do is create more of a group education setting to where if someone wants to know how to roll a ratio spread, if that's what you're looking for, we want to be able to be the people that can provide such a thing for you. So over the course of the next couple of weeks, we do intend on making these more detailed, but we're not going to have anything released, and it's going to be to our subscriber list only. So if this is something with which you are interested in, go to our website and sign up for our newsletter. If you're on our newsletter list, you will get on the list for the this new stash of webinars that we are revamping and that we're excited about. KnowYourOptionsInc.com, and we're very excited.
All right, and thanks for that, Uncle Mike. And of course, we are also joined by the men from Slinky.com, aka OptionPit.com. And Andrew, what is coming up in the land of OptionPit?
Well, Mark, the Slinky Master, is in New York to do a webinar with TheStreet.com and the SIBO on the VIX. So people can sign up for that until 5 p.m. tomorrow. You have to go to the SIBO website because it is sponsored by the CBOE. And I think basically Mark and Russell Rhodes, the guy that wrote the VIX book, will be sort of giving you the secrets and the nuance of really how the VIX works, how it's priced, how it trades. So you can start to get, instead of just seeing kind of the VIX number, you actually understand what goes on behind making the number. And when there's some opportunities, when things start to get a little bit out of whack. And I think that's the kind of thing, Mark's got a lot of demand for that. So that's what he's going to try to address, to the extent possible in the webinar tomorrow, in the seminar.
And of course, he and the SIBO will also discuss their detailed plans for restructuring the VIX and fixing that whole settlement process, right? That's also
exactly, and making it exactly how Mark wants it.
We're just making friends left and right on the show today. All right.
Yes.
And last but not least, Mr. T-Nav, what is coming up in OX land that might intrigue our listeners?
Well, we've got 2 free workshops coming up. We have a workshop in Austin. That's on December 3rd from 8 a.m. to 3:30. And we also have a workshop in Boca Raton. That's on December 10th, also from 8 a.m. to 3:30 p.m. So you can go to optionsexpress.com and you can register for those events.
I'm just going to go out on a limb here and say the one in Boca may be perhaps aimed at retirement planning.
Yeah, probably.
Or perhaps what to do now that you are retired and how to protect your nest egg or something along those lines that aim at the, let's say, the grayer-haired spectrum.
Yeah. A lot of calendar spreads probably taught on that one.
There you go.
Or
exactly.
Covered calls.
A lot of gamma scalping in that seminar, I think.
Lots of people with lots of stock that they're just going to be selling calls on. I mean, which isn't bad. I mean, I have seen a couple of those recently. Someone just, I just transferred my account to you. I have all this stock. I'm just going to start selling covered calls. Can you, walk me through some of those trades?
All right, now that we've officially offended also the geriatric portion of our audience, it's time to bring to a close this episode of the Option Block. Of course, I want to thank all of our listeners out there for downloading and streaming and subscribing to the program and making it such a success. And stay tuned. I'm sure some of you have already visited our site, have already seen the launch of our latest program, the Advisor's Option. If you're a financial advisor or an asset manager or a financial planner or anyone in the land of asset management, by all means, check out this show. We partnered up with the OIC to put together an interesting program for those of you out there in that line of work who are considering or mulling incorporating options in your portfolio in some way, shape, or form. So we just launched the premiere episode, and there will be many more to come of that program down the road. Of course, you can surf on over to theoptionsinsider.com to check out that program, as well as all of the other topics we discussed today, including the unusual activity. There's far more of it on the site than I have a chance to discuss in any given episode, as well as our news feed where you can find that Bloomberg story and others, all free to you and all available 24/7 over there on the old optionsinsider.com. So that's going to do it for this episode of the Option Block, and we'll see you again next week.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.